is going on? What is going on? What is going on? It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel where you get Big Rob, no Big Dave. Dave got the day off, but you got your boy. You know what that means? That means I get the microphone the whole time. And I don't get interrupted. And I don't got nobody to fight me.
I got to interrupt you now, right now.
Okay. All right. Well, Rocco can interrupt me.
I got to interrupt you a little bit, just not much, just a little bit. Otherwise, Dave is gonna feel like
man, your boy free, man. You know, I feel like a bird has been feel like old Larry. You know, a bird has been locked in the house all day, all his life, and he's finally set free to unleash his true potential and fly around. Nobody can stop me. Real quick, if it's your first time checking us out, hit the like button and also say hello if it's your first time, because then I will drop an hola back at you. Big day today. We got a lot going on in today's show. Today we're going to be discussing Do Kwon and the FBI investigating Terra Luna. We also have CBDC's a test pilot is going live right now on the Swift system. So CBDCs are closer than you think. And then also we have the Brave browser incorporating off-ramps so you can buy and sell crypto on and off-ramps directly from the Web3 browser. Also, we're discussing a little bit more fallout from Silicon Valley Bank as well. And then why did USDC unpeg? Also, we have Ripple CEO Brad Garlinghouse talking about his exposure to the Silicon Valley Bank crash as well. A little Charles Hoskinson tweeting as well, which has been stirring the market and bringing up some interesting perspectives when it comes to treasuries. Also, ChatGPT, the latest upgrade is out. And what does that mean for you? What does that mean for Ethereum? Because it says Ethereum might have some technical glitches. So says a supercomputer. And also, because I have no co-host, we have brought in a TA expert. We got TA Tim joining us today from Investing Bros. He'll be joining us here shortly to give us some his perspectives on the charts and some price targets. Because you know what? Your boy wants to know. Are we going to be heading over to 30K, or are we going to be going back down to that 20K mark? Seems like there's some indecisions in the market. We did test the 25,000 mark. We traded above it for about 1 day, not even. And now we're below 25K again. So really curious to see on where his take is on where the market is. But also here in the chat, we would love it if you would ask questions. Talk to your boy. You are our co-host today. You here. First of all, have you hit the like button? If you have not hit the like button, then what's wrong with you? And also, the chat is going to be my co-host. Are you excited about co-hosting this channel with me? Are you excited about having nothing but Big Rob today? Put a 1 in the chat if you're excited. Put a 2 in the chat if you're going to stay quiet and you don't really care about me. Thank you. All right. So before we get into any of the articles, I won't go too far into prices. However, because we have TA10, but we're going to take a quick look here. We have, taking a look, you got Bitcoin coming in at $24,282. We're going to take a quick look at the price movement over the last last week here. So you can see we did get as high as over 25,000. That was 24 hours ago. And now we're trading underneath the 25K range. And I was talking about this on my Sunday show. And so the last time we were above 25,000 was back in June of 2022. And so big resistance / support. There's not much in between 30 and 20K. So you see here this big drop where you went from 30,000 down to 20,000. You'll see that there's really no support or resistance historically with that either. Like if you go back over here, back in 2020, you can see that we went from 19,000, so basically 20,000, and we just shot right up. And this is over the span of 2 weeks. We went right up to over 30,000. So historically, there hasn't been any support or resistance at this. Now, are we going to start creating support and resistance at some number in between 25 and 30? Because my idea is that if we flip 25, we turn it into support, really not much stopping us from going to 30K. That's where I lie, and that's what I want to get TA Tim's perspective on this. I want to know where he thinks Bitcoin's going to end up trading at if we get a bullish scenario and we start getting above 25K. And then some of the biggest gainers today, we have XDC Network up 5%. Pax Gold as well. I don't know. This thing's still around. Pax has been around for a while. Pax Gold. Like, what does this follow? Does this follow the price of gold? You know, Rocco?
No, I don't even. I know he's.
Yeah.
I never get into it.
This is like a derivatives, gold derivatives, maybe. I don't know. I'll have to take a look at it. But but most of the market is red here. So taking a look on the 24 hours, Filecoin down 22%, Lido down 20%, Optimism down 17%. And the list goes on and on. If you take a look at the crypto bubbles on the daily, it is red across the board. But if you take a look at the weekly, there are still some projects that are outperforming others. Stacks up 30%. This had a big move yesterday, up over 50% yesterday with a pullback today. And outside of a couple big projects, it is pretty red across the board. But this is the daily here. Look at that, man. Everything's shedding off a little bit. Also, the Fear and Greed Index over 50. So it's neutral at the moment. But we're not only seeing sell-offs in the crypto markets, but also in the broader markets. NASDAQ down a full percent. S&P 500 down 1.6%. So this is the headlines here in the traditional stocks sell off gains because of the banking crisis. So there's more fear that this banking crisis is going to spread from what we just had to even more. And so that's the narrative there on the traditional markets. All right. And then real quick, I'm just going to take a look through we have, I see a couple new people here. We got a lot of ones. So like y'all want to join me on the co-host here. So appreciate that. Good. But if you're new here, say hello so we can jump an old lot back at you. We got Kevin Kwan. We also have Morgan Saylor. We got Luke in here. And that's the only people I recognize. And Med Inas. To all of you, hola! Welcome to Sin City Crypto. Also, I just noticed we got Brian Baca here as well. Crypto No FUD. I don't think you guys are new as well. So, hola to you as well.
Yeah, the name were pretty good. No butchering today. It was good.
No, not butchering?
It's okay. I think it was pretty good.
Okay.
It's Dave there, kind of.
Yeah, he's always over there judging me. You know, where you at now, Dave? Pull up the Dave cam. Pull up the Dave cam.
The Dave cam.
Where you at now, Dave?
That'll focus too.
Yeah, look at that. Let me ask you a question. Where'd you get your haircut? Yeah, what I thought.
Why it doesn't say anything?
Yeah, that's what I thought. All right, so let's get into our first topic today. There was an interesting tweet. Let me pull it up here. Here we go. So I got this tweet pulled up. It's Charles Hoskinson yesterday. And he says, crypto needs to de-risk itself from the unstable and volatile banks. So nothing too crazy there to unpack, right? Kind of straightforward. Basically saying, hey, crypto is more stable than the banks are. And, actually you can make an argument, a very compelling argument, that in the span of the last couple weeks, that is true, right? You had banks closing. We had 3 banks closing last week. You had money printing. You had people kind of freaking out, people doing runs on banks. And so, the narrative here is that banks were calling into question their stability. And now you have what is deemed unstable and risky crypto. being the exact opposite and being stable. And we even saw the price of Bitcoin rallying when people were freaking out on what was going on with Bitcoin. I mean, with the banks. So we saw a surge in interest in Bitcoin and a surge in uncertainty in the banks. And so Charles Hoskinson fires off saying, hey, we need to de-risk from the banks. But then someone else says to a comment he made, he said, so this guy here, Crypto Dojo, says, agreed, we need a decentralized crypto bank. And then Charles Hoskinson said this, and I don't even really understand how to unpack this. He says, the moment we can digitalize treasuries, it's game over for the banks. Which kind of got me thinking, I mean, right now, crypto does everything the banks essentially do, right? All of their services, pretty much you have a savings account, aka a store of value. You can transact value, aka send and receive payments. And it does everything a bank does. However, the banks they're at their cores, they buy and sell treasuries or bonds to and from the government. And I'm not exactly sure how crypto would fit into this, which is why I messaged old Charles. I said, would you be able to elaborate? This is difficult for me to conceptualize. Would crypto projects mint and transfer treasuries? And I don't know what that would look like from a developer standpoint, which is why I messaged about this. But no, it got me thinking. Is that something that crypto projects are going to facilitate? Is that something that we're going to be able to take away from the banks? Is the issuance of bonds and the trading of treasuries between to and from institutions, banks, and citizens like me and you? Can we buy and sell bonds on a crypto platform? Is that coming? Because when I first heard it, I was like, that's silly. That's the government's job, right? That's what governments and central banks do. They issue bonds and they buy them and they move them back and forth. But then after Charles said that, I thought about it. And he said something that he said, the moment we digitalize treasuries, it's game over for the bank. And I thought about it, and I was like, wow, that is so true. What the hell would anybody need to use a bank for if we move treasuries and bonds without a bank? I mean, you talk about XRP, you talk about stellar lumens, you talk about this ISO 20022, which we just put out a video, by the way. Go check that out. We discussed this, and we talk about value moving, but we never really talked about bonds moving and treasuries. And I think that's essentially, I think Charles is on to something when he says that it's game over for the banks, because that's I think probably their largest revenue stream, right? All right, so let's get into my first article here. FBI is investigating the collapse of Do Kwon's Terra Luna, per the Wall Street Journal. So just when you think this man has disappeared off the face of the earth, well, he kind of did, but you know what? They're still looking for him, and they're still trying to hold him accountable. And I was discussing this on another show, and my perspective is here. Like when you watch one of those zombie movies or even a virus movie, or we can even look at the pandemic of 2022, if that's the thing, or 2020. When was it? Yeah, 2020. So you can look at that, and there's always this looking for patient zero. You know what I'm talking about, Rocco?
Yeah.
When there's the zombie outbreak or whatever's going on, or there's a new virus movie, they're always looking for patient zero. And why did they look for patient zero? Right? To understand how it started, to prevent it from happening again, to understand its origins. And then, when you're trying to solve a crime, you always want to go to what is the motive, right? Because the motive is what started it all, right? Yeah. Why did this guy kill this person? Well, what was his motive? Well, his wife was cheating on him, or she stole money, whatever it is. You find the motive, and then you build off of that. And so why the hell did FTX crash? Why the hell did the banks crash? Why the hell did Silvergate go under? Why the hell did Celsius go under? Then you think about it. And who was patient zero? Look at this. Look at that face right there. Why the hell is there an American flag behind him? First of all. But
I don't know.
I don't know. Could you picture a better picture here?
The picture from the
Forecast news. Come on, man. You could have got a better picture than that. But here's the thing. This man right here, this is patient zero right here. He is the catalyst. You know what? Because Terra Luna was flying. Terra Luna went down. It depegged. And then what happened? You had the collapse of Celsius, Three Arrows Capital. Then you had Voyager. Then came FTX. And then you had the banks. Genesis. It all goes back to this guy, Patient Zero. He's the one that bit the bat. And so former employees of Terraform, so now the FBI trying to get some answers. So let's dig into this article here. So former employees of Terraform Labs are being questioned by the Federal Bureau of Investigations and prosecutors from the Southern District of New York. Terra Luna's founder, Do Kwon, a South Korean, is the subject of an Interpol red notice. This is basically the wanted by the, was it English police? Is that Interpol? Is it England? Or is it EU? Yeah. So he's believed to be living in Serbia, by the way. Now, which is funny because he keeps tweeting like he's not on the run here. The SEC alleged that Do Kwon and Terraform defrauded investors by saying that Chai used Terra blockchain to process payments. First of all, if you guys don't know, Chai is a payments app similar to like PayPal, but in South Korea. So basically, the SEC is alleging that Terraform Labs and Do Kwon used in partnership this app called Chai to inflate the value of the Terra token, right? Which, if you guys remember how much of a rally Terra Luna, the Luna price shot up so drastically over the last, during that run up of the bull market. And people were like, hey man, where did this money come from? And so was a lot of this artificial? I think it was. And if it was artificial, then you had unrealistic prices that was also tied into a stable coin that the price is relying on the stable coin, the was it USDT, that price was reliant on the price of Luna. So if the Luna token price was overinflated, unrealistic, and it was being pumped up, it was going to retrace. And in retracing, that volatility gets absorbed by USD. So if anything, Do Kwon should have recognized by artificially inflating the price of the Luna token, he was creating a bubble that when it popped, create volatility that was directly absorbed by the stablecoin. All the writing was there. So the collapse of the Terra Luna stablecoin should not have been a surprise. If anything, he should have seen it coming, because he was the one manipulating the price, or so says the SEC. And then before we bring on TA Tim here, I do want to say that CBDCs are here. They no longer are an article or discussion of the potential, and eventually we're talking about the rollout coming. It is being tested by over 20 countries. So let's look. CBDC projects on a roll. Swift is actively testing out CBDCs as we speak right now, and there is clear potential and value, so says banking executives from this test pilot. Banking Messages Platform Society and Worldwide International Bank is the International Financial Telecommunications, or SWIFT, is disclosed. So SWIFT disclosed that financial institutions witnessed positive results related to the pilot test linking different central bank digital currencies. Banks see clear potential and value in Swift's experimental CBDC, connecting after the Sandbox collaboration. This is not the Sandbox. This is not the metaverse Sandbox, by the way. But interoperability is key to releasing the potential of the CBDCs to deliver real-time cross-border payments. This is no longer a rumor. Like, the Swift system is testing it out. In the ongoing year, over 20 countries will take significant steps towards piloting their CBDCs. This includes Australia, Thailand, Brazil, India, South Korea, Russia. They're all testing this year. And the ECB is also likely to pilot next year. So now CBDCs are coming. Now, we can sit here and argue about control and what's going to happen. Either way, they're coming. Can't stop them. You know what else we can't do? We can't stop my boy TA10 from coming and joining us on the show. So, Rocco, we ready?
Yeah, we're ready.
What up, bro?
What's going on? How are you doing?
I'm doing great, man. Thank you for joining us.
Oh, yeah. Thanks for having me on the show.
Yeah, man. It's what a great day to have you on. You know, we've went, you know, we were looking at some of the price movement, because what was it? We traded sideways for, it was like 3 months or something. You know, we'd had a couple little up and down movements, but essentially, you know, we traded between 20 from January of the second week of January all the way until a couple weeks ago, almost 3 months. We traded in between 20,000 and 24,000. And, you know, we would step up, take a little pullback, but now it seems like something's changed, right? Seems like we might be in a different area. Are we going to pull back down to this $20,000 to $24,000 channel here, or do you think that we're set for the next leg up? Is 25K plus on the table? What do you think?
Yeah, I think at this point I'm gonna give the very very common technical analyst response. Yes, it could go up and it could go down. There are levels, and that people always hate when technical analysts say could go up, could go down. Well, guess what? That's how the market just works at any given moment. It always could go up or could go down. The question is, what are the levels and what are the spots we're looking for, and what are the if-then statements? So, you know, when you hear an analyst say, well, it could go up or could go down, a lot of people tune off right there, when if you listened, the majority of us are giving, if blah, blah, blah happens, then it will go up. And if blah, blah, blah happens, then it will go down. We can jump over to that chart right now. Let me go ahead and share my screen with you and take a look at what is happening here. This is a pattern that is not a very common pattern that we're seeing develop on the more macro timeline on Bitcoin. When I say macro, I guess we're still talking not at macro meaning bull and bear market.
I just learned what this could potentially be called. Let me guess. Is this a bullish megaphone?
It is a bullish megaphone. Yes.
There it is.
And it's very, as you can see, very beautiful. The people that created the name, they didn't necessarily have a whole heck of a lot of creativity when it came to it. They just looked at what it looked like and said, let's go for it. And what we're looking at right here, there's probably could be drawn two different ways. I've been drawing them with wicks. You might see some analysts even move this line down and say, you know what, let's go candle bodies, but it still doesn't answer for the fact that we haven't had a candle body close at it for a third significant time. Something that's very important about patterns, I'm actually shooting some content at the moment discussing this exact topic, is that you really need to see 3 touches to confirm a pattern. So at the moment, while this is what a lot of analysts are looking at, you can't necessarily say with too much certainty that we have all the touches we need. We really kind of have one good touch right here, one good touch right here, and we did not get our third touch. We're close, but there's a reason. I'm going to talk about this here in just a second. I think that 27,000 is a very interesting spot that's within reach right now, that's not just unrealistic and crazy. I think there's a good chance, if we continue to see the stories develop the way they're developing with banks and what we're seeing the Fed now kind of pull back. I don't know if you guys saw that and talked about it, but we're now looking at the prediction is by the end of December, we could see 100 basis points cut off of interest rates. If that continues to be the narrative, yeah, we're talking 30,000, 40,000. There's an outside chance, and I want to stress outside chance that we're hitting 50,000 and potentially even new all-time highs. I think it would be short-lived because anything that would push us that high will probably bring us back down in a drastic pullback. But what we're looking at right here is I do think we're going to get one more touch right up here over the next couple of days. This is just what we've had happen over the last little bit is just a nice little pullback. These are very common during rallies. We have had some great calls of this, calling for rejection. This is a tool that we have in Chart Prime indicators that gives you predictive reversals. Down on the 4-hourly chart, you can see these have been pretty lethal. We did have that pop back up, but it's very, very simple for it to come back. Just find some support. I'm going to talk about a level. When I say it could go up, could go down, it's more than likely going to go up and down here over the next little bit. The question is where, though. There's some things I'm looking at here with Dynamic Reactor that I do think look intriguing. Let me go ahead and pull up some of my support and resistance level I'm keeping an eye on, and we'll kind of address that. Yeah. Go for it.
The Fed interest rate. And then here, I just pulled up a little. This is from the CME here. And so they're forecasting that a higher probability of a pause on rate hikes. And the CME has been dead on so far. Now, this has been this has been moving quite substantially lately, but without any big numbers coming in, looks like we'll probably get a pause, or at least so says the CME. So.
Yeah, well, you know what? I'm going to reshare my screen right here, and I'll go back to TA in just a second. But it's not only this prediction. What's really cool about this website, if you guys ever use it, is you can also go into these tabs right here and look at what they're predicting the rest of the year. As I mentioned, if we just jump to December, look at this right now, 30.6%, and there's lots of different levels here, are predicting a 375 to 4. I guess that's higher. Earlier this morning, it was 350 to 375 because currently we are sitting at 450 to 475. So it did swing just a little bit. So now it's back in the range of like 75. Either way, that would be huge to have that many cuts. This tool is pretty cool. So right now in May, it's expecting if we're gonna zero, let's see, this is 0 right now. It's still predicting another 25 basis point hike in May. But then you move over to June, and it wants us to actually, let's see, it's about even. It's going to have one cut right here, a 25 basis point cut is what it's predicting. July, we'll get another 25 basis point cut with 37%. In September, let's see what it says. It looks like, I can't remember the number. It looks like September, it's saying it's going to pause, is the prediction at this point. November, I'm guessing the November cut. Yep. So we'll get one more cut in November, and then December will stay still. That's the kind of future forecast.
You know, I never actually took time to hit these tabs here, and what value you just bestowed upon me, bro. That's nice, man. Yeah. I'm definitely gonna start using this as well because I've only looked at the coming month, or the next rate hike. So that's interesting. So. Yeah, 30% chance that we are 1 full percent lower come December by the end of the year. That's
this morning it was leaning at it. We would have to get down to the 350 to 375.
Oh, is that the 1%?
So it did shift. So right now it's predicting 75 basis points down, and this thing is so fickle. Going back over here to March. I don't know if you guys were following this, but at one point last week, it's not even a suggestion, I think, at the moment.
Yeah, the 50 basis points.
There was an 80% chance that we were going to have 50 basis points. That, of course, was before Silicon Valley had its news day, and now it's shifting back over towards 0. Who knows? By the time we got 1 week. 1 week from now, we'll get FOMC. Who knows if we start to see a 25 basis point cut for this month actually start to even gain some traction. A lot can change in 7 days.
Right.
Yeah.
And that's yeah, man, it seems like what was not volatile, like what we have volatility in is in the prospect of these interest rate hikes, because at some point they're almost predictable. And now it seems like the markets have no idea what direction we're going to go. And so, which is interesting.
And that right there is why you have to have if-then statements when it comes to technical analysis. Things can change on a dime. We can have all these predictive ranges we want and give all these levels and look at formations, but every technical analyst will tell you, hey, formations are never 100%. Even if you find 10 different forms of confluence, you're still not looking at a 100% guarantee the market moves like you want it to, but you're getting the higher probability. But what makes a trader good is not just what they predict and what they call, but how they respond to changes in the market, whether they're using oscillators, whether they're using indicators, whether they're using formations, whatever you use, your ability to change your opinion on things based off of new information is what makes traders good or bad. And people can keep yelling and screaming that technical analysis is fake and a sham, but it's there's a lot of people making a lot of money using it, so they're not complaining too much. Let's take a look at a couple of different things here. I did want to show some levels. A lot of chaos going on my screen, but this is another really cool tool that Chart Prime has that it just gives you a whole lot of different support levels. What I have pulled up for you guys right now, this green line is the 12-hour chart local time. So looking at like more local candles, it's ranking the order of the most probable support and resistance levels, or the strongest support and strongest support and resistance levels, excuse me. The blue line, which there's not a lot of them right in here, I don't think. Let me go and check that. The blue line is the 4 hour, so there's not a lot popping up right there on a more extended time. And then these orange ones are the daily. What you're looking for here is where you're going to find a lot of confluence. Here on the 4 hourly chart, I'm watching this, what we call the dynamic reactor. It kind of floats in between the 200 and 100 SMA, a great place to find support. I'll show you some more of that here in just a second. I'm seeing some confluence down here closer towards 23,000, 22,000. I think if we move up here, if we even move to the 12-hourly chart, we're going to find some levels that with the dynamic reactor, maybe even talking about lower towards 22. But this zone right here, a lot of confluence here. I'm watching if we do get some bearish pressure, and if the bears too come in strong, I'm going to watch this zone right here based off these support and resistance levels. Let me pull that down and even go into some more traditional TA, kind of show you also why I think this could be very, very important.
And what is the price channel, or what is that zone there?
This zone right here?
Yeah, like what are the bounds of that?
So what I'm watching right here, they're on the price action. So about 22,000 up to about 22,800. If you want to stretch it, you could call it 23 is when it's probably going to start getting interesting. But as I was showing you the 4-hour chart, we have a dynamic reactor coming in right here at the higher end of this. On the 12-hour, we have it coming in down lower. We have two different strong levels of support being called for on our different timelines. And again, the one thing I want to pull up here in just a second would be also this more recent golden pocket is going to be sitting right there at the bottom end of that band as well. I know that looks like a lot of chaos, so let me turn these off really quickly, and you will see, boom, right here we have a golden pocket sitting down at these lower $22,000 levels, kind of matching up with that 12-hour dynamic reactor place as well. It's not just that, but even on a more macro timeline, if I were to pull up a longer time Fibonacci retracement, let's go to the bottom we had back here in November, and we can go two different places. We can start with where we're just peaked out at 25.2, and you're going to find that we have let's see. Actually, let's go all the way up to the peak right here. You're going to find that we have the 0.3 or the point. Oh gosh, I got to get rid of this smaller one because even I'm getting confused by that one. Let's lower that down. Right here we have the 0.382. There we go. The 0.382 level sitting in the exact same area. Just so people realize when we're looking at Fibonacci, it is very common to come back down towards golden pockets. We didn't technically hit the golden pocket back here. This is fake. Technically speaking, we got just short of it back when we reversed here a couple of days ago, but the news came a-calling, so Bitcoin is ready to reverse. In this case, I'm not necessarily looking for a golden pocket retest unless something changes that really swings momentum back over to the bears in a strong way. Despite the fact that we rejected up here, getting above 26,000, couldn't quite touch 27, and we're retracing. We're finding support right now on this longer time frame 0.236 level. It would not be a huge loss to the bulls if we came back down to retest 22.3. That would still be setting us on a newer trend of setting higher lows. So If we see some more pressure from the bears, and if we don't get something within the next couple of days, which I can't think of anything off the top of my head as to why we get this pressure, I would not be surprised to see us come back down and retest this 22.3 before we jump back up potentially. I don't know which one will happen first, but I have a good feeling we're going to be seeing a $27,000 prediction, a price prediction of Bitcoin, and we're probably going to see somewhere close to these lower 22s. Which comes first, I'm not 100% certain yet.
I'm glad you threw out the 27 number. Now, I'm not the TA guy, so just glad I get to have this conversation with you, because when I look at the charts, I look at it at the more simplistic level, and I'm like, all right, where's historically been support and resistance levels when it comes to price action? And there is no history. Like zero history on the range between 25 and 30K. On the way up in 2020, it shot from 20,000 to 32,000 back in 2020. And then on the way down, it did the exact same thing. So for me, I understand those are both parabolic events. One, you had, I think the FTX collapse was one of them. Or no, it wasn't the FTX. I think that one. Either way, one of the exchanges went under, or one of the big platforms ceased trading, and that's where we went from 30,000 down to 20,000 without really stopping anywhere. Right there, yep. And then
it was,
on the
Celsius,
way up,
right?
yeah. So yeah, right there. And then on the way up, when in I think it was December of 2020, we didn't stop anywhere either. And so I was over here trying to figure out, like, what is some major support and resistance zones? And there just historically has been none. And so my initial kind of knee-jerk reaction, and let me know if I'm onto something or if it's a different time, my initial reaction was, if we break above 25,000, there has historically been no levels of support and resistance. And if we catch momentum, so 1 week from today, we got the federal funds interest rate announcement, which a lot of speculation on where this thing's going to land. And I got this feeling that if they pause rate hikes, that might just be the catalyst that pumps Bitcoin and risk on assets in general up above 25,000. At least Bitcoin over 25,000, 26. And historically, there just hasn't been any stops. So I'm just like, it's not going to stop until it gets to 30. Is there any merit to where I'm getting at, or the chart's telling you something else? What do you think about when you get into like price discovery in a zone that doesn't traditionally have any support and resistance?
Yeah, so the first thing I would say, you're absolutely right. What you're referring to, and a lot of analysts have discussed, is this what we call a volume gap right here between the 25.2, and it really starts to pick back up around 28,400. If you ever hear people talking about 28,000, more often than not, technical analysts are looking at this little pocket of volume, and that's what they're getting this call for. There's a couple reasons why I have 27. The first one, it was one of those zones that I pulled up for you guys over here. So I know that line stays there because I drew there, but it's one of the zones that Chart Prime is calling for and saying, hey, watch out for this level of resistance. But also, if I were to zoom in here on this volume profile, you'll see that it actually is the exact bottom point of volume, meaning there's the least amount of things happening here when it comes to exchanging money. And you might be wondering, all right, well, Tim, wouldn't that be even more of a reason why we do not reject there, that we just blast on through it? That's not really the case. When you're looking at valleys and peaks, and that's what we're looking here with volume. So these peaks, these valleys, both of them are very, very important. Just like if I was driving a car through a mountain, it's really hard to get up a mountain, but you pick up momentum, you put on the gas. Once you hit peaks, there's usually a lot of resistance there as you start to come back down. It's just kind of like, hey, we've had a long, hard trip up here. It's time to rest on the peaks. When you come down the mountains and you hit the exact bottom, now your car goes from being pretty much having to put no gas into it whatsoever to now you got to start pumping gas again. You have to have a switch there. So a lot of times, like for example, when you're coming down a mountain, let's go this way. If you're coming down a mountain and you get to this exact valley, it's a moment where the bears could really come in and flip all of the momentum because this is a low point. And the bulls, they might have gotten there kind of running down a hill like it's easy, but this is the time they actually got to put the car back into gear and start to add some gas. And there's sometimes some resistance that happens at those zones. You can see it several times throughout this whole thing. Look at some of these rejection points. These are not peaks. These are some of these valleys that we had. Now, yes, we do reject at peaks as well, but just as important, you see this little nice valley right here. That served as our temporary rejection back here in December. You want to pay attention to both of them. So two different things I'm looking at on the charts are calling that 27. It also, again, when I'm looking for confluence in this megaphone pattern, look at how close and look at how close we are to that timeline. It wouldn't be nonsensical to come up here and hit both of these resistance levels in this bullish megaphone pattern, and then see another slight bit of rejection. With bullishness, I think people who don't necessarily watch the charts all the time, they get spoiled by some of these absolutely crazy parabolic bull runs. Even, for example, going back to the bull run of 2020, I remember this was still early in my time in crypto, I watched and I listened to my friends who were crypto enthusiasts, and they followed this for years. And I just watched them at every single point say, oh, yeah, that's the top. Wow. Like, oh, we got to 20,000. Wow. Well, good touch. Now it's time to reject. Oh, wait, we're going to keep going. Oh, okay. Well, with 25,000, we're going to keep going. We're going to keep going. And finally, after rallying all the way up to 41,000, almost 42,000, we had a nice 30% pullback. But traditionally, rallies have pullbacks, and they don't just get so parabolic. Here in the shorter timeline, just because we have a red candle today, and even if we have a red candle the next day or two, this doesn't necessarily mean that the whole rally is over. It's just a time where some traders are going to be taking some profit. It's going to pull back. It's going to regroup, setting a higher low. And then, especially if this news stays the way we're looking at it, and if the momentum and pressure can continue to be in the way of the bulls, setting these new highs, getting up towards 30,000 is not going to be a problem. In fact, I actually think once we get above 30,000, the next level to kind of keep an eye on, I don't know, I had another one at 36. You can see a small amount of volume right there. But also, up here towards 42, there is some strong levels that if the bulls can really rally, we could see a bounce back all the way up. Another thing to keep an eye on when you're looking at these levels in a more macro term, I told you I'm not ready to make this call and say I'm confident we could see this, but using the same Fibonacci, very basic technical analysis. What the heck, chart? Stay with me over here. The reason I've seen some technical analysts call for 50,000, and you might call them crazy, but they're just calling for a very basic pullback to the golden pocket. This golden pocket, if you go from the all-time high of 69 down to what is right now the bottom of this bear market, and very well might end up being the exact bottom, this golden pocket sitting right here between $49,000 to $50,000, that is not a weird retracement, even to say, hey, the bull run's not completely ready to start just yet. This is just a retracement back up to golden pocket, and then we could see a lot of volatility pulling back down closer towards 30,000 for the rest of the year.
So you think that 50,000 in that golden pocket is like, say, on a 3-month time frame? Because obviously you wouldn't shoot up to 50,000 in anything shorter than, say, like a month, but in a 3 to 6 month time frame, in the same way that we've seen in prior 4-year cycles, I think that's a pretty good bullish price target there to retrace there.
Yeah, I think before we're talking about massive bull market, like what I'm saying here is we could get to 50,000 and the bull market not be ready to just take off. We could rally all the way. Now, it's not going to hit straight. Let's say it would be like this, but we could come all the way to 50,000 and still come back down towards 30,000. And people are going to get really depressed and we're like, oh, I thought we were going to new all-time highs. That's just basic technical analysis of trends. Here's what I'm kind of looking at.
Yeah, we saw that. We saw that in 2018 bull market or bear market, excuse me, where we came down from 17,000, and then in the bear market rally, something that sounds pretty similar to where you're at, we went from 18 to 12,000. Like this right here. Yeah. That seems.
Take a look at this right here. Like, look at how far we rallied up. And of course, the pandemic kind of screwed this up, but we actually got all the way up to the 0.786 level, dropped back down below 0.236, and then the bull run started after this.
So is that also exactly what you were kind of playing out there? Did it retrace to the golden pocket off of that bear market bounce in 2017? Is that
like I said, it went higher. If I draw this line right here, you can see that this target, it came back up to the 0.786, even higher. So me talking about 50,000 golden pocket is more conservative than what we saw 2019 do after the 2018 bear market. And again, the bull market wasn't ready to go even before the pandemic. And I've talked about this on my show.
Tell me those don't look similar though. I mean, those look
Close.
eerily
It's
similar
close.
cycle to cycle, right?
It's somewhat close, but I mean, we don't know. We haven't seen anything
Yeah.
develop over here. So I think when we approach that golden pocket, you could come back over and again, the argument would be, as much as we're talking about a very bullish run up to 50,000, now the argument would be, hey guys, be weary that we're up here towards the golden pocket. We could still retrace in this point until back here. I am sure that traders were riding high. They're very excited. Even before the pandemic, we had a 53% drop. That would have happened whether COVID, I don't know if I'm allowed to say it on YouTube or not, whether the pandemic had happened or not. This just came in with a black swan event and sent us even further. But before the pandemic, we still had that 50% drop. The same thing absolutely could happen over here. The news that's kind of fresh on my mind to keep an eye out for is this news developing with Grayscale and the judge ruling that the SEC is being ridiculous by denying them that spot ETF. We could see a Bitcoin spot ETF here in the US by the summer, and that absolutely could be a catalyst for a price to jump up to 50,000 and then again take a nice little dip back down to these levels, which we've been struggling to get back above, but we'll turn them back into support. And then maybe down the road in 2024, this is my timeline's all messed up here. Maybe down the road we actually start our new bull market where we go back to new all-time highs.
Hey, awesome, man. That was some good content there. Do you got any altcoins or any other charts or anything that catches your eye that you might want to discuss? I don't have anything in front of me that I can personally say I want to look at, but
yeah, I would say I don't know if I'm going to pull up a charts. You can technical analysis is good for trading. I mean, you get into the really nitty gritty part of it. I could show you a lot of juicy things on charts. At this point, watch cryptos. There's going to be a following of Bitcoin. Bitcoin is still the daddy of crypto, and when Bitcoin moves, the children are going to follow. You'll see some things develop on their own, like Ethereum. I'm gonna watch as we get this new Shanghai update and we see the staking released. Don't be surprised if there's an initial sell-off confirming some of the things that people are feeling. There's some people in a very bearish camp on Ethereum saying when they unlock staking here, that a lot of people are going to go in and remove their Ethereum. I think it's going to give people courage to put more on, but I wouldn't be surprised to see a decent little a dip in the price action before it continues to rally and follow Bitcoin.
I'm glad you brought up the Shanghai upgrade here. Actually, we're going to kind of discuss one of our first articles here. So the Shanghai upgrade executed on the testnet, but pretty much came out without any major issues. Now, Ethereum validators are now one step away from being able to unstake their Ethereum on the Beacon chain, which you can discuss the implications of that on price action. But obviously, the next big upgrade is coming. So the Shapella hard fork has executed on the Gurley testnet. The last test run before Ethereum's validators will be allowed to withdraw their ETH from the Beacon chain. There were, however, issues with the hard fork. Ethereum co-developer Tim Beko noted that while deposits were being processed, the processes didn't run as smoothly as it could have because the testnet validators did not upgrade their client software before the fork. This isn't the first time we've heard this, where some of the validators and the nodes hadn't switched over to whatever upgrade or the newest version that they needed to. So it sounds like it was a validator issue versus a code issue or issue with the chain itself. So once again, he blamed it on the validators and not having too much incentive to upgrade. Now, we had the Shanghai upgrade get pushed aside, right? I don't know if you're catching up with the timeline here, but it was supposed to roll out, I think actually this month, and it got pushed back about a month, which in the Ethereum space, no big surprise there.
I was going to say, in comparison, isn't just 1 month of a pushback a very short amount of time for Ethereum holders?
Yeah, that is peanuts compared to the move from proof of work to proof of stake, which at the time was supposed to launch. I think it was in 2017. Came out or 2018, something like that. 2017, 2018. And there was a 6-year delay on that one, or 5-year delay. So 1 month. The thing is those upgrades were, you're changing the consensus mechanism the entire It's essentially security of the chain. So much bigger of a task. This Shanghai upgrade should be something more manageable. It seems like it's on track. What's your first reaction to this upgrade? Maybe discuss the potential for these unlocked tokens hitting the market, or maybe the upgrade being beneficial. Is supposed to increase throughput a touch, from my understanding. Nothing game changing as far as gas fees, but it's supposed to make it slightly more efficient. What's your takeaway when it comes to Ethereum and this testnet?
Yeah, I think this is going to be bullish long term. First of all, I mean, we're seeing Ethereum finally do what it said. Ethereum price action, when you think about it, you break down all of what's happening there, it's actually not doing as well as it really should have. Ethereum actually could be picking up here very soon, because despite the fact that it's keeping up with Bitcoin, it's also deflationary at the moment. So when you kind of do the math, technically speaking, Bitcoin is slightly inflationary, Cardano is inflationary, Ethereum's deflationary. I think that upgrades like this, again, there's that speculation, that bearish thought of, okay, when they unlock this staked ETH, all the people that are staking their ETH are going to run in and remove their staking or remove their Ethereum from these platforms. And I don't think that's going to happen. There might be a very small fake out of that. But I think this is actually the confirmation, more so than when you hear that you can now go in and stake your ETH and get it off very quickly. That's actually a positive thing that makes you feel more comfortable going ahead and staking your ETH. I think there's a lot of people who, when they saw how long it would take to unstake it, or the fact that it would be locked up, they might have been more hesitant to go in and stake their ETH, saying, I don't know if I'll ever have to use any of this and liquidate it to pay bills, to pay taxes, to pay anything. This now is more of okay, so now I can put it on the exchange, I can stake it, and then I can pull it off quickly. I think this is going to be long-term bullish. I think that Ethereum has a lot of room to go. The only story I'm really worried about, and I'm really hoping it doesn't play out this way, but does Gary Gensler, as he continues to go after altcoins, does he get his way? He would like to see Ethereum be classified as a security. I think there's still a lot of hope that that's not going to happen. Of course, we did just have the New York Attorney General in one of her lawsuits calling it a security. That does not make it so. It just means that that's her opinion, and that's Gary's opinion. I'm still pretty confident that judges will rule in favor that Ethereum is not. But who knows these days with what the government and the SEC is doing? There's just so much proof of collusion there, and it's all the more reason why we need to get power away from them, and currency needs to be decentralized, and there needs to be a way more accountability of politicians. And again, those politicians are part of who puts the people in place in the SEC, in the Fed, and whatnot. So if we have accountability over our politicians, we'll have more accountability over these government entities like the SEC and the Fed.
Yeah. No, there's always now you have the risk of, what is the SEC going to do? And at this point, I don't even think the SEC knows what they're going to do. And there's always an uncertainty, and the narrative has shifted from, hey, government agencies saying this is a commodity, and now the narrative has changed, at least from the SEC's perspective, and they're saying, hey, this is likened to a security, or at least they're entertaining that narrative, where before it was just a foregone conclusion that they're a commodity, and perhaps I don't want to say perhaps, it just so happens that this narrative has changed at the same time that they had the proof of stake rollout. And so that's one thing. But for me, I don't want to discount, even though this is a smaller upgrade in comparison to some of the other upgrades that we've seen, there is always a potential for risk when you have a hard fork, and there are potentials for issues. And Ethereum, you can look at their history, they are not free of potential setbacks. And we have Ethereum Classic, and that is literally a tombstone right there, reminder that what seems to be efficient and running and perfect can take a turn for the worse. So just take that into account. I wouldn't bet the house that this is going to be a completely error-free transition to the Shanghai update. And even the dev says, hey, even though it's the validator's fault, it didn't even go 100% smoothly. And then also, I will say that I'm not even the only one that thinks this. The ChatGPT version 4, which if you're not familiar, ChatGPT version 4. This is the newest rollout. So if you've heard of ChatGPT before, basically it's a AI-based software and out that uses real-world data that you can put in there. So people have been throwing the Ethereum smart contract code into ChatGPT to analyze if there's any issues or anything that's potential disruptions there, any weak points, and ChatGPT says it identified many exploits in the Ethereum contracts. I don't have anything highlighted here on this article, but it did find vulnerabilities, and it called Ethereum a Ponzi scheme. So, it does take data from the real world, people's initial thoughts. So, if you get enough people in a room calling it a Ponzi scheme, it's going to take real world data from Reddit and from blog posts and other places, social media platforms, and it's going to use that as its data source. But it does analyze code pretty well. It can write code, and it says Ethereum has some potential problems there. So I'll just leave it at this. Just don't bet the house on Ethereum having zero issues on a hard fork. Just that's my piece of advice there. So
yeah, and I think you want to take in all information you can and process it to try to make a good decision for yourself. Before you trust this article too heavily, though, I do want to offer a counterpoint to what ChatGPT does, because there's a delusion that ChatGPT is completely open sourced and non-biased, and that has proven time and time again to be false. This AI is more programmed than you would think, and guess what? It's in the hands of the same type of people who pay to have articles published saying that crypto as a whole is a scam. So don't jump too quickly on saying just because ChatGPT is calling Ethereum a scam and doesn't like it and is finding these exploits. I think that's a little too hasty to say, oh, yeah, we 100% trust ChatGPT because they're non-biased. They've shown to be extremely biased. And here, the other part of that would be, good. If they found exploits, good. You can fix them. We've seen that happen before. As much as I'm not a fan of it, Solana, what really hurt Solana isn't the fact that it has setbacks, it has these outages. It was the connection to FTX. Before the FTX debacle happened, or if they had never connected themselves there, those outages did not stop people's confidence in how that technology could work. Same thing with Ethereum, same thing with these other coins. Just because they're having some problems early on, we're still, people need to really grasp this. We are still in the very early baby stages of what blockchain technology and cryptocurrency can achieve. Yes, there's going to be gaps. Yes, there's going to be holes. Yes, we're going to continue to make it better and better and better. But guess who has the money to do that at a higher level than possibly any other coin? It's Ethereum. It's Vitalik Buterin. They have the ability and the resources to fix mistakes and be great. Ethereum is not even necessarily my favorite altcoin, but it's not what I'm betting against in the future either. I think whether it ever flips Bitcoin or not, I think there's a very good chance Ethereum remains king of the altcoins for the rest of its existence.
Yeah. Yeah, I kind of line that same stance as you do there. Now, I do want to give just a little love to the chat here. Earlier, we had a $4.99 super chat from Crypto Bow Hunter. Before he joined us, we were discussing Luna and its price being artificially inflated before the big crash. And he was asking if that would meant that all crypto bought with Luna was also inflated. I think Luna absorbed most of the price action that might not have been realistic, which got transferred over to USDT, which is why it grew so much. So that's my personal thoughts on that. Also, if you're new here, say hello so we can drop an hola back at you in the chat. We do got a couple new people I saw here. We got Sabby's Life, Rob, Degen, and Crypto Locks. To all of you, hola! Welcome to Sin City Crypto. What was your initial reaction with this whole banking crisis? And I'm going to preface this with a couple articles. First of all, we have hey, Rocco, pull this up, pull up my laptop there. So I got the this little GIF here. So you got Jerome Powell raising interest rates, causing a chain reaction that brought down crypto, Alameda, FTX, Silvergate, and then Silicon Valley Bank. Even though this is a meme, I feel like there is some truth to that. I think that there are more dominoes in between crypto and Silicon Valley Bank. I think there's treasuries in there and other things. So I don't think it's a direct reflection of what crypto did to the rest. But anyways, I do think that the Fed raising the interest rates is the cause and effect of what we're seeing in the banking sector. And then here we got Charlie Bellio. He has said, and his tweet here, which is kind of interesting. Total assets of 371 U.S. bank failures from 2010 to 2022 totaled 168 billion. The total assets of the 2 bank failures last week were pretty much double that. And so you can see here, and then you can see that the bank failures followed the total assets lost here, right? And are we going to see the same curve? And because right now we're at 2 bank failures. Back in 2008, we saw 157 bank failures at the height here. Is this something we're going to see more of? Obviously the value of the dollar is less than it was then. So I feel like this number, this 320 billion, will probably get into the trillion mark if we were to follow a similar pattern here in 2008 because of the value of the dollar. Also, KPMG gave Silicon Valley Bank a clean audit report 14 days before it collapsed. It blessed Signature Bank's books 11 days before, and then they failed overnight. And so our regulators, like the KPMG and some of these other credit, where they rate and credit different banking and traditional institutions and even governments, are they being swayed by perhaps an outside bribery, influence, friendships, or did they really just completely clueless going in and auditing books and just have no idea? I don't know. And then, so this also spilled over to what we saw with the depegging of the USDC. So Jeremy Allaire, the CEO of Circle, basically said, here, I'm not going to read this whole article, but his firm had $3.3 billion worth of what is supposed to back Circle locked up in Silicon Valley Bank. They are basically saying they had their own corporate funds that they could have moved in its place to back the stable coin, but they didn't need to, for the simple fact that the FDIC came in and said, hey, we'll insure all depositors regardless if it's over the $250,000 mark. And also, they weren't the only one. Ripple CEO Brad Garlinghouse said his company remains in a strong position as well, despite the Silicon Valley Bank. So I'll kind of end it there. Kind of, what's your first thoughts on this banking thing? CNBC, some of these mainstream media networks are saying the reason we had to pull back in the stock market is that there's fears that more banks are going to go under. Do you think that, we'll start with the meme, federal rate interest rate hikes is collapsing the system? Is this contagion going to spread? Are we going to see more of this spilling over into the crypto markets? And what do you think?
Do you remember when, I can't remember her name, but the White House chief of staff tried to blame inflation on corporations?
Yeah.
It was the absolute dumbest argument we've heard, because corporations don't get to print money. Who prints money? The government. This is the same type of stupidity. To say that these banks are crashing because the Fed is raising interest rates, correct me if I'm wrong, did the Fed go into all these banks and have them over leverage themselves and have them borrow monies and have them give out lots of loans? And did the Fed have them invest in the stock market or in this or that or that? No, they did not. It was the banks that made these decisions. And then the government, if you want to say, all right, so that was the business's side, they shouldn't have over leveraged themselves. The government decides to print out an exorbitant amount of money to send out checks to civilians because the government also wanted you to stay home and not go to your job and help grow the economy. Then it also wants to send trillions of dollars to Ukraine for their fight against Russia. The government is the one that keeps spending the money, running out of money, and the Fed has to respond. The Fed has to raise interest rates to try to fight against inflation. And yes, are the banks crashing now due to those interest rates being hiked? Absolutely, but you can't blame the Fed. The Fed is trying to fix the inflation of the dollar, that the real guilty party is the United States government that does not know how to budget, does not know how to spend money, just thinks whenever they need more money, they can go to a tree and print off some more and they get more money, and that's how life works. I don't know about any of you guys. Is that how it works for any of you? Do any of you, just anytime you run out of money, just go print? I guess I'm now talking if someone's a counterfeiter, maybe that is your life. But the rest of us know we have to abide by a set of rules. If you have the money, you have the money. You can go out and borrow money. You can leverage yourself personally. But when the debtor comes a calling and you don't have the money, you end up in big trouble. There are consequences for those decisions. More often than not, those consequences are bankruptcy or even worse, prison. It is not the Fed's fault that banks are over leveraged. It is the bank's fault. It is the government's fault. And it is why fiat currency does not work. Money that is not backed by anything but a human or a group of humans is a terrible form of money. That's exactly what the US dollar and every other form of fiat currency is.
It's moving such a Ponzi scheme, man.
Yeah. I don't understand.
And if any of the business model, or if any of the models that we have for the banking system were used in that ideology was used in our private sector, the drum would be the drum. They would be beating the drum for this. This is a Ponzi scheme. This is fake. This is corrupt. This is not right. Nothing is bad. Like we're talking about. We discussed for years how much money backed Tether. Right? They only have 60% of the funds. They only have 70% of the funds. The banks don't even have 10%. Like how crazy is that? And then they're incentivized to borrow. They're literally incentivized to borrow and then take customer funds and earn an interest or earn yield by putting into treasury bonds. And you know the fault, everything that kind of happened. Not at all the fault of the interest rate hikes. Not in the slightest. Now, I will say that the Fed was an integral part of printing through quantitative easing and the issuance of treasury bonds and buying corporate debt. They did facilitate the problem. But the interest rate hikes was not the problem. That was the catalyst. That was the Binance to the FTX. That was the guy that, there was too much leverage in the system. And when you took away, when you tried to remove the surplus of borrowing, basically just this endless borrowing, because the interest rates are at zero. Corporations, companies, venture capital could borrow as much as they want, and then you could simply just borrow for zero interest, and then you could buy treasury bonds, and then repay the borrowed amount and then flip the profit. But then you run the risk, what we saw where they raised the interest rate hikes and then your bonds are worth trash. This is exactly what happened with SVB. And instead of them borrowing directly from the government, venture capital borrowed, and then venture capital put their money in SVB, and then SVB put their money in treasury bonds at a 1.3%. So then when they shot up to 5%, they're worthless. So this is all cause and effect. The banking collapse is a cause and effect of the Fed interest rate hike. However, it was the malpractices of the bank that led us there. It was the greed and the risk management failures of the banks that got us there.
Absolutely.
So it's
and you're
all
right.
Just a messed up system, man.
The Fed does play a part because the Fed is involved in the printing of money, but the Fed is not involved in the spending of money. And that's what the government gets involved with, and that's where it's their fault. But moving on even further into this, where does crypto and all of this fit in? You got to take a step back and remember something very fundamental about Bitcoin and the government as we stand right now. When Bitcoin was first created, right? Those years between '09 and 2013, it was completely ignored. Nobody really knew what Bitcoin was. Maybe every now and then you heard the name, but people weren't even interested enough to ask the next question, what is Bitcoin? They just heard it being said and they're like, all right, whatever, I don't care. Between about 2013 all the way till about 2018, 2019, we were kind of in a phase where, I guess 2017, 2018, it was more of a laugh at stage. And I'm going to be honest with you, I fell into the stage. I remember hearing one of my friends who was investing in Bitcoin back in 2014, him trying to explain to me why it was so important, and me just thinking this guy is absolutely nuts. This guy is crazy. And that's how the majority of the world responded, government included. It wasn't a threat. They didn't need to promote and send out all these FUD articles and tell people it was a scam because it wasn't even relevant at the moment. It was just something being laughed at. Fast forward to the 2018, 2019, 2020, we started to actually grow, especially that 2020 bull rally. We've moved into a phase where we are now being fought. Bitcoin is being fought. They're not laughing at crypto anymore. They're scared. They are terrified of it. So you got to remember that every single news article that is owned by some fat cat that has their hands in the pockets of politicians, they do not want to see crypto succeed. They want the power to stay with them, the centralized systems. The government and the people that are stuffed in their pocket, like every politician does not want to see crypto succeed if they have people in their pockets, because those people in their pockets don't want crypto to succeed. They're going to pass bills. They're going to place blame. They're going to do everything they can to tell you as a retail investor, stay out of crypto. Why is that? Why are they doing it so aggressively? Because there's actually nothing they can do to stop you. They could even try to pass laws to ban it, and they still could not stop you from owning crypto. They are so terrified that people will one day wake up and realize how corrupt the system is, how terrible fiat currency is, and that's what we're seeing happen with these banks. And I guarantee you that these banks, we've been hearing about problems for a long time. Credit Suisse, for example, we've heard Credit Suisse was in trouble for a while now. But these other banks, I guarantee they're having problems, and that was kept hush-hush. And the thought was, man, we have a real problem. If people start to go to their local bank to take out their money and put it into this new decentralized currency, cryptocurrency, Bitcoin, Ethereum, Cardano, Litecoin, you name it. If people start massively moving their US dollars into Bitcoin, like what El Salvador is doing, we have a very real problem. So they posted as much FUD articles, as many things saying that crypto is a scam as they could, but it wasn't good enough. These banks, the piper has come calling. The banks don't have the money, and people are going to realize, despite the fact they've been being told for years now that crypto is a scam, fiat is even bigger of a scam. I'm not sure yet if it's quite ready for it, but that day, that revolution of the massive switch to a currency that actually makes sense is coming for every single centralized system, and they are absolutely terrified. That's the reason why you see all these FUD articles. That's why you see them trying to blame cryptocurrency for financial problems. It's not crypto's fault. Yeah. It's not finance. It is the government. It is the banks, and people are going to wake up one day and realize that.
Now, I'm no expert in the banking sector. I've researched it just because of my position in crypto, and I probably share similar kind of expertise. But what do you think? You think this contagion is going to spread across more banks? And just kind of like your gut feeling. You think we're going to see more of this? Or do you think the government's simply saying, hey, but depositors are safe, don't run on the banks, we'll basically print more money in the event that banks can't facilitate withdrawals? You think this is going to get worse, or do you think the worst is behind us?
You know, I'm kind of torn on this one. It's going to come down to the Fed. I think there's banks right now that no articles are being printed on, that they're struggling right now, and they know that their days are numbered unless something big changes. We had one of my good friends, Caleb Franzen, on our show the other morning, and he was talking about how he thinks that the Fed that fully expected this. That's not what we're seeing with these predictions of cutting 100 basis points. That's why I think next week, 7 days from now, when Jerome Powell takes that stage at the FOMC press conference, what he says is going to be so crucial. Yes, the number will be important, whether he raises 25 basis points or goes with no interest rate hike, or even if he cuts. I want to hear those numbers too, but I want to hear what his narrative is, because if he comes out and says, listen, we're going to cool off for a second because there's some pain right now, but we knew this was what was going to happen with his interest rates. We knew that banks were going to struggle, that individuals are going to struggle, but we have to fix inflation. Then I think we're in for a a very terrible year for banks, for the stock market, for maybe even a lot of cryptos, but I think you could see even some cryptos respond positively to that. I want to see what Jerome says. If he comes out and says, yep, we're changing our policy, we didn't anticipate this type of mass fallout, we're going to go ahead and start back to easing. Well, then we're not going to hear a lot of bank closings because they're going to get the printed money coming in. They're going to get that effective bailout. What's going to be hurt is every single retail investor that has to live in a day-to-day world where they pay and get paid in US dollars, where every single day the value of the dollars they are being paid gets put down the drain. I mean, I'm not even 30 years old, and I grew up with 4 siblings. So there's 5 of us children. My parents were both married. My mom was a stay-at-home mom. My dad worked full-time, and I remember him telling me his top-paying job paid him $90,000 a year, and yet he was able to provide. We owned a home. We played sports. Were we the wealthiest family in the world? No, we were not, but we also were not necessarily poor. I don't know about the rest of you. $90,000. I know people that are single who are they're making $90,000, and they're not necessarily in poverty, but they're not living a life of luxury either. A $90,000 paid job isn't actually that impressive the way it might have been closer towards 20 to 30 years ago.
Apartment and just like a Honda Accord, like a new one. Like that's about it, man.
Yeah.
You get a 2-bedroom apartment and the 2022 Honda Accord. And you know what? That's about it right there. That's what'll get you. So yeah, that whole American dream, which I think is just the credit industry trying to get you to borrow money. The American dream doesn't exactly realistically exist. It's just it's unachievable at this point. Even that American dream where you borrow money to buy a house, probably can't even borrow enough money to buy a house and still get by without the whole fam taking up a job. I do want to end. I liked what you said earlier, where in 2014, crypto, Bitcoin was not even discussed at the table. It was at the kids' table at Thanksgiving. You know, it wasn't even part of the discussion. And what we've seen lately is that Jerome Powell's over here taking the stage, answering multiple questions on the implications of crypto, CBDCs, what it is doing to the banking sector. We had the CFTC chair discussing his role in trying to regulate crypto. Another branch, they're butting heads on their views on Ethereum and CBDCs. And so you have hardline stances from different branches of the government on crypto, and it is an ever-growing topic of conversation at the White House. And so if you were to say, hey, we got regulators going to be nonstop, you can't have any kind of meeting that involves finance that doesn't incorporate crypto now in a legislative form in Congress without throwing Bitcoin in there. It's just a testament to where we're at. You cannot ignore it any longer. You can try to suppress it, but unless you turn off the internet, it ain't going nowhere. So, Tim, do you got anything you want to leave us with? Anything going on in your circle there? Anything you want to leave with our viewers?
Yeah, I would say, I mean, kind of wrapping this whole thing up, don't get flooded out now. I'm not promising that Bitcoin won't even go down and set new lows. There's still absolutely a chance that the lows and the bottoms for Bitcoin are not quite in yet. Here is the thing, though. It is time to lock in to your belief system when it comes to cryptocurrency. I know a lot of people got in to make money. And guess what? That is one of the awesome advantages of crypto and of trading that you can utilize. But hopefully, even if it wasn't your reason for coming in, being in the crypto space has gotten you the fever of saying, I'm tired of fiat currency. I'm tired of the centralized authorities telling me what I can and cannot do, and also controlling the flow and value of my currency. It's time for something better. This is when we're going to see this change. The government is coming out strong. Articles are coming out strong against crypto because they are terrified, because we are close to a massive victory. Keep pushing forward. Continue to hold your convictions. Do not give up to the FUD or the FOMO. Continue to keep your head on your shoulders and educate yourself day in and day out so that you can take care of your own money and your own finances. That's the best advice anyone could give you here on Crypto YouTube.
Awesome. Well, thank you so much. And to those of you in the chat in the Sin City crypto community, make sure you go and support TA Tim on Investing Bros. We left his the link to his channel in the description. So go over there and give the man a sub. And, we don't do too much TA, and they do. So if you're trying to get that TA itch, make sure you go over there and check that out as well. All right. Well, Tim, thank you so much for joining us, man. It's a pleasure. And
Absolutely.
we look forward to having you on next time. Or if you ever need one of us to join you, feel free to reach out.
Oh, yeah. This is, my old gig didn't let me do anything at 2 p.m., so I couldn't come on here for a long time. I'm looking forward to coming on here more often and getting you guys over on our channel as well.
Beautiful. Well, let's do it, man.
All right, man. Take care.
All right. Take care. Thank you so much. All right. That was good, man. Yeah, he is
Inside.
he is passionate on the fundamentals of Bitcoin and kind of like what it stands for and what it fixes. And you get certain people and they're kind of, they look at it from a money perspective. And which at the end of the day, a lot of us are here for that reason, but some people, you can tell that the technology and the disruptive nature that is crypto and the failures that we have in our current system, a lot of crypto remedies some of the problems we have, or a lot of the problems we have in our financial system right now. And I'm excited to see that coming. And I think Tim shares that excitement with me. So that's always cool. All right. So where are we at? Let's get some more likes going on in here. If you haven't hit the like button, why not?
Why?
Yeah. Why?
What's going on?
And then I think we got a couple new people. So we got Paulukin7, JDM. We also have I think we got BRCMC. No, he's been here before. What's up? Anyways, if you're new, say hello so we can jump an hola back at you. To all of you, hola! Welcome to Sin City Crypto. And then lastly, I do want to talk about Brave. So Brave Browser. So we've had this issue with crypto banks or banks that offer crypto services that have been shut down, particularly Silvergate and more recently the Signature Bank. So we've called into question, how are you going to get your money on and off of crypto exchanges? Now, you can still ACH, and I'm not sure how they're doing it, but you can still cash out at Coinbase and other US-based exchanges. That hasn't broken, but anyways, if this landscape were to get worse, we have a DeFi version of an on and off board. So you have the privacy-centric Brave browser now allow crypto assets selling inside of their wallet extension. And so if you're familiar with Brave, first of all, they have a crypto token, but this is a Brave browser similar to all of the other internet browsers, Firefox, Chrome, all that. This one particularly focuses on not having ads and selling data on the webpage. However, they pay you and incentivize you to use their browser by issuing you out tokens. Anyways, they have a wallet extension. And so you can store your Bitcoin, Ethereum, other assets on this wallet on the Brave browser. And now they're tying this into to Ramp network. And so this Ramp network is going to be the bank that facilitate on and offboarding of crypto. So now you can use, let's just say, so for those of you that are more familiar with MetaMask, for example, you can keep your assets on a web-based browser, transact in a DeFi way, buy and sell your crypto, do your swaps, hold NFTs. And now when it's time to cash out, you don't need to send it from your MetaMask wallet, or here it's going to be your Brave wallet extension. Instead of moving out of there and sending your assets to Coinbase or to whatever exchange you're using to off-ramp, you do it right from the wallet. So now you're expanding the utility of these wallets. And I think this is the beauty of DeFi. As you get less points of failure, as you get less things that you need to do to accomplish your goal, the more adoption we're going to get, right? Because the last thing you want to do is you want to move your funds from here to there. The less points that you have to do, the easier it is, more simple it is, the more adoption it's going to have. Now, there's not a ton of community using the Brave wallet. And so, sorry about that. So there's not a big community behind the Brave wallet right now in comparison to some of the other DeFi platforms. So, it's I'm curious to see how big this will get. But I think what it'll do is it'll incentivize the competition, perhaps to have more widely used on and off boards. I'd like to see this on MetaMask. This is where I'm getting at. Because if we can have our MetaMask wallet also do exactly what the Brave wallet is doing, I'm looking forward to that. Now, I know MetaMask does have some third-party companies they work with, particularly their like credit card and check card competitors where you can onboard by using a credit card. But from my understanding, ACH straight to your bank, I haven't seen that functionality on MetaMask. So I think they're going to probably try to keep up with the competition. So, all right.
I have a question about that.
What's that?
You think so? So maybe I completely get it wrong, but I don't see just a new version of Tornado Cash, kind of, because I don't know. Elizabeth wanted to have something to say about this.
So Tornado Cash wasn't the only mixing service. There's actually a handful of them. Tornado Cash was the most popular of the group. And I would assume you're still going to KYC. Now, that that Brave Wallet extension uses Ramp. So you would probably have to create an account with Ramp, and you're going to probably KYC there.
Okay.
And what this is just imagine if you didn't need if you didn't need to send it to Ramp, it still stayed on there. So when you sold, Ramp just sent it the cash value without it going on their platform. I guess you could do the same with like a Coinbase wallet. So a Coinbase wallet, you can interact with Web3. So a Coinbase, you can tie it into a platform. So let's just say it's not exactly a web-based wallet. I guess it is, but anyways, you can use it in a web browser. And if you were to sell right there, now it doesn't have that functionality. You can't sell from the Coinbase wallet and go straight to your bank. You would have to take it from the Coinbase wallet back to Coinbase. But that seems like a quick fix, right? And so Coinbase could theoretically do the same thing that this Brave wallet is doing. And instead of it having to send the funds back to the exchange, it could just sell it right. It could sell it right there. But you would still be KYC through Coinbase. So just replace Coinbase with Ramp. Instead of Ramp having an exchange you have to send it to, they're just doing it right there on chain. So less steps. So that's where I was kind of getting at, is that I think the competition, maybe the Coinbase is like, hey, no longer do you need to send it back to the exchange. You want cash, you can sell it right here on our web-based browser wallet. So I think that's just the evolution of where we're getting at, and the functionality and the utility is growing. So you remember when you went to go like rent movies and you had to rewind them before you returned them? Otherwise you'd get charged a fee.
I remember the tape. The cassette
yeah.
The VHS.
You would get feed if you returned it without rewinding it. And then lo and behold comes the DVDs. You didn't need to do that anymore. And so DVDs became more simple and easier to use and had more adoption. I don't know if it had more adoption, but either ways, it was the next step of the technology. So people, because cassettes took more steps and you had to rewind it and it was harder. Like say you wanted to watch a segment of a movie on VHS, you had to physically rewind it. And now you could just go to a scene directly from a DVD. And so that technology became more efficient and more progressive than what came before. And so now we're seeing the same thing in these Web3 wallets. You're seeing what used to only be a store of value now is having functionality. You can stake on chain directly from your wallet. You can onboard and offboard cash directly from your bank, from your wallet. You can facilitate, you You can hold NFTs. So the utility is growing, and what was the first to come is becoming obsolete. You can make an argument that the DVD then got replaced by obviously streaming and downloading.
Mm.
When was the last time? I remember growing up, you used to go to somebody's house, they had that VHS collection. Remember that?
Yes.
Where you would have like the little tower. It's like a wooden tower with all the little slots just filled up with movies. And then you fast forward 10 years, it was filled up with DVDs.
The same thing with the MP3. It's like they're replacing the CD.
Yeah, but now here's the thing. People aren't buying because I was thinking about it the other day. People aren't necessarily buying movies anymore. The reason you used to buy movies is because you didn't have access to the internet, right? And so if you wanted to watch a movie and you didn't want to go to the store and pick out a movie, you could pick from your collection because you didn't have a real-time option outside of that. So if you had 5 movies at home and you wanted to watch a movie and you didn't have a car for whatever reason, or you lived out in the country and there was no place to rent movies close by, you could only watch those 5 movies. That was it. And then you would incentivize to grow a collection. Now that you got the technology has grown and you don't even need a collection. You don't need to buy a DVD because you want to watch a movie. You don't need to go through your collection. You can go through the entire collection that is the internet, which is every movie ever created. And you can just pull on that anyway. There's no point to buy a movie. Is there any reason to buy a movie? I mean, maybe if you're a super fan and you can justify spending 3 to 4 times the value of renting for the simple fact that you're going to watch it more than 3 or 4 times. Outside of that, there's no reason to buy it, right? So if you go to buy a movie, you have to literally say to yourself, am I going to watch this more than 3 times? And it's hard to make that argument for a movie, right? Have you ever watched a movie more than 3 times, Rocco?
Yeah, there are some movies that I watch multiple
But it's only a
times.
handful, right?
Yeah, it's an handful.
So,
I can say probably Rocky. I probably
so
watched
why
10
on
times.
earth would you pay $20 for a movie when you can rent it for $3.99 if you don't feel like you're gonna watch it more than 3 or 4 times, right?
There's a movie that I will buy it to watch it because they're being remastered. They're old. I would love to. But you know what it is? When I bought a new TV, they gave me an account, the Sony one, and there's a bunch of movies, and I bought some of them. Then they shut down the service, and those movies are gone forever. So I pay for it. This is why I wish an NFT is gonna go back, and fix this
That's
problem.
coming, man.
And
that is
my movie. I pay for it. $30
that is
each.
all digital assets that we know. Like, here's the thing. Like, I downloaded a game for the computer. It was like one of the Sims games. And then, I don't know what happened. Like whatever service I downloaded the game from, that went under. And then I can't play the game anymore. So if I want to play it again, I got to buy it again.
Exactly.
And the same thing, like you said, man. You buy a movie, and that service goes under. It's done. You buy a audio track. Let's just say Spotify goes under. All that money and time you spent into it, it's all gone. But if this is on chain, this is NFT, that it immediately fixes that. So, all right. Well, anyways, that's gonna be it for today's show. I'm gonna go ahead and drop this thumb tornado and
Thumb tornado.
drop this thumb tornado for saying thank you for not hitting the like button, whoever you are. And but anyways, Rocco.
Okay.
Wrap it up. Friends, family of friends, and co-hosts that aren't here, thank you so much for joining us. And make sure you come back tomorrow. We are live 5 days a week. What else am I missing? We got a merch store. This is run by the Don himself. Don't forget, whale members, you get 10%. There's a bunch of cool new stuff in there, even for the ladies. Leggings and all kinds of cool stuff. And also... what else am I forgetting? TikTok, Instagram.
I'm going to show my calf, if that's okay with you.
What's that?
I want to show my calf.
Your calves.
Yeah.
Yeah?
Yeah.
Huh?
Ready?
Yeah.
I hope I don't shock everybody.
Okay, what do you got? You got some big ass calves or what?
Let's do it. Let's see.
What you got? Oh man, I'm excited here.
Let's do it.
I ain't never seen Rocco's legs. You got some skinny calves or what? Okay. Your boy got the big chicken legs. Okay, you got a nice little calf there, bro. that Bitcoin sock? Yeah. We're gonna have to put you up against. Oh dang! Why am I drawing a blank here?
Oh, there's no way.
Frankie Candles, yeah. Frankie Candles.
Well,
Man.
we're both Italian, so that's
Dude, yeah, he's a stallion there, bro. You guys. Remember,
right.
I lived in Italy, man. There was this giant hill, man, that my house lived on, and I had a skateboard. I just remember
you gotta walk
being
up here all the
terrified.
time.
Yeah. It's all those hills out there, bro. Here in Vegas, there's no hills. That's why I got no calves.
Slap.
I'm telling you. All right.
All right.
Thank you so much, guys. Have a good one.
Bye.